Welcome back. U.S. stocks rose to another record by market close, with U.S. stocks now worth more than $19 trillion. With earnings season winding down, what's driving the markets now? Joining us to talk about this is Drew Kanaly, chairman of Kanaly Trust Company, which manages over $2 billion. Drew, good to have you on this morning.
Good to be here, Rhonda.
We have a lot of earnings news. We have the Fed out of the way. We are this morning getting some information on retail sales. What's going to influence the market now in the weeks ahead?
Well, Rhonda, you still have to go back to what's been influencing them from the beginning. You have to look at the fundamentals of the marketplace. And that begins with good credit, good Fed policy, good regulatory policy, good tax policy, and good trade policy. All those things are still in place. So we may have bumps in the road here and there about earnings in certain sectors in the market, but the fundamentals of the market are still in place.
We get numbers on the trade balance shortly. Why do you say we have good trade policy?
Well, we have good trade policy in that the flow of goods between countries are relatively unfettered. They aren't trying to restrict trade. Now, the Bush administration recently had a coated paper tariff with China, which is not good news. But generally speaking, we're able to trade with our partners freely.
And as far as the side of credit availability, obviously in the short term, none of that will change based on what we heard from the Fed. Do you see some of the other factors that have been influencing the market, the M&A activity, the private equity buyouts changing at all?
No, those are not going to change. It still makes sense for them to go out and borrow money and buy these companies. That's going to stay in place until we probably have a little credit bubble there at some point down the road, but that's a year or two away.
Drew, what about the consumer? Just based on some of this retail sales data we're getting so far today, are you concerned about that at all?
No, I mean, you just have ebbs and flows in consumer behavior, and this is part of it. I mean, you're still seeing, wages and income going up, so the consumer is going to be intact.
What stocks do you like?
Well, we like a lot of things. We're getting a little wary, but not quite ready to give up on the materials. We've had quite a bit of success in things like Rio Tinto. We're also concerned about just commodities in general, so in terms of the energy for the oil service, so we don't have to worry about the commodity aspect.
You like Schlumberger, you like Halliburton, right?
Correct, or people could just use a very simple ETF for oil service.
Now, why is it that you like these stocks and the businesses behind these companies, even though we've seen oil prices pull back and there's always uncertainty when we talk about commodities?
Right. In terms of oil, what you're going to see in the future is just higher lows. I mean, the days of $25 oil are over, and certainly $50 probably would be a threshold amount. At that point, these companies are still going to be exploring, looking to expand their production, and these service companies are positioned to benefit from that.
Do you see an increase in acquisition activity within that group?
There might be some mergers, but generally speaking, it's just their profitability is going to be very handsome, but there might be some mergers that make sense, some synergies in different aspects of the service sector.
All right, Drew, I know a stock you like is Berkshire Hathaway. Hard stock to go out and buy for some investors, though. How do you recommend investors who like Warren Buffett's style but can't afford his stock get into doing what he does?
Well, they've got to figure out a way, because what it really is, what we're using it for our clients, is private equity, which is another place that's very difficult for the average investor to participate in. But really, when you look at Berkshire Hathaway, certainly their cash flow comes from insurance, but what they do with the cash flow turns them into a private equity firm. And our bet is that Mr. Buffett and his crew are going to be better private equity players in the long term.
Drew, we are watching the market hit record after record as far as the Dow goes. S&P 500 close to it. NASDAQ, of course, is not. But are the markets overall healthier than they were the last time we saw so many records being set?
Oh, absolutely. I mean, if you look at the S&P 500, in these conservative estimates, now remember, I think Thompson had the earnings estimates for the first quarter at 3% this year, and they've come in at 8%. I promise you they're not overestimating earnings going forward. So if the forward PE of the S&P 500 is 15, we're a long way from an overvalued market.
Drew Kanaly, chairman of Kanaly Trust Company, joining us from Texas this morning. Great to talk to you. We'll see you again soon.
Thank you, Rhonda.